Hello and welcome to this special budget edition of Investors Hangout. This series is brought to you by Aditya Birla Sun Life Mutual Fund and Value Research. Now, big day today. Finance Minister Nirmala Sitharaman presented the first full budget of Modi 3.0, and we are here to break it down for you with our in-house expert Dhirendra Kumar. Welcome, Dhirendra.
Thank you.
Let's start with the big one, tax slabs. No mention of the old tax regime, but under the new regime, the tax slabs have been revised. Can you please share and explain what difference does it make to a common taxpayer?
Oh, it's very straightforward. You have more money if you earn 12 lakh rupees. Because, going by my very basic, starting and calculation, even assuming you are making 12 lakh rupees a year, and you are not liable for any tax. Your earlier tax liability was 68,750 rupees, which means that you will save 68,750 rupees
Extra in your
pocket. And likewise, at every stage, it is translating into this kind of benefit. And if you earn 15 lakh rupees, you will save 31,000. Earlier, you had to pay 1,25,000 tax. Now you have to pay 93,750 rupees. A net saving of 31,250 rupees. Likewise, if you earn 20 lakh rupees, you will save 82,500. If you earn 25 lakh rupees, then you will save 1,10,000 rupees. Now it is up to you whether you want to spend it or there was your desire to spend and you have to do it. But use it as an opportunity to invest. Now it is up to individuals to really take it, in their hand. Government has given you all these benefits that, okay, now this is a straightforward tax relief. And all the tax benefit that you used to get is gone. Now this is the new tax regime. There is no concession. There is no incentive. All you are saving money. It is up to you to save, invest, or consume it. So I think it is about time that you become more serious about investments. For many people, the tax saving fund or the tax season or approaching March used to be a trigger. It used to be forcing us to think about how to save taxes, and in the process we used to invest. Now you will have no such thing. You take it or leave it, but and it is important that you start worrying about it, because there is no trigger coming from the government that save tax. To save tax, you will invest. That incentive is gone forever.
Right. Now, how does Budget 2025 benefit senior citizens through the TDS reforms?
Oh, this is quite significant. Two key benefits here. Like earlier, interest income up to 50,000 rupees was taxed. There was no TDS on that. Now that has been increased to 1 lakh rupees. And for most people, who are not filing return, tax deduction is tax paid, even if you are not liable, unless you file a return and claim a refund. Then I think for all the retirees who have rental income, this is very beneficial, because you were liable to, the tax deductible, TDS provision was there for rental income up to 2.4 lakh rupees. Now that has been increased to 6 lakh rupees. That is very significant, because this is one of the principal revenue stream for many retirees, that you have an extra house and you are getting that rental income, and that is supporting your income. And on that, the TDS applicable on 2.4 lakh rupees was very insignificant. So at least now, if you have a reasonable income up to 50,000 rupees a month, it will not be subject to TDS.
Right. Now, what is the revamped Central KYC Registry announced in the budget?
This has been a work in progress for a while. 5-7 years back, it was initiated, and this has been a big pain in this country for savers and investors. For any kind of significant spending, you can just go ahead and buy it. You want to buy 5 lakh rupees worth of jewelry, you go to a jeweler shop. Maybe you are liable to give your PAN, but that's about it. I don't think anybody gets into validating it. But if you want to do any investment of over 50,000 rupees, the whole KYC process gets triggered in, and that is not all. Now KYC and re-KYC and the processes involved, and you are not ready to invest. Assuming that you have 50,000 rupees in your bank account, you want to invest, but it's a huge barrier. It's a big friction for somebody to initiate, to get onboarded, to initiate his investment process. So this has been a work in progress, a centralized KYC. But what has happened of late is that there are multiple KYCs mechanism. Your banks do their own KYC. Right. they are held accountable for doing it rigorously. If you do it with one bank, you go to another bank and they are supposed to do it again. Then you want to make some investment, they will do it again. I think, only SEBI made it possible that, okay, you do your KYC once with any SEBI regulated entity, then you don't need to do it. There is a KYC, KRA, KYC agency. But this central KYC, making it effective and making it, that becoming potentially a seamless thing. That if you want to invest and your Aadhaar is linked, your PAN is linked, and you are ready to invest, because if it has been done once, why you need to do it time and again? So this, I think, is happening, and enabling people, because now there are a lot of intermediaries who are in this process, who are part of this process. Now that will get reduced to that you go to a bank or you go to a RIA or you go to a mutual fund, and they will be in complete readiness. They will have access to this. They will check your credentials that you have provided. It will be validated, and then you'll be ready to go. And so in that sense, this, I think, is a great enabling thing. It will simplify investments. Getting started is one of the biggest barriers. And
this will simplify.
Not only that, it also has a mechanism, because KYC is to be done once, but there are a lot of people who get transferred, who change their residence, whose other variables also change. So how do you update it? Having and in this country where we are making big leaps in the digital world, I think it's happening late, but nevertheless it's happening, and it's a great thing.
All right, now one final question. Which sectors do you think show improved outlooks post-budget 2025?
It's very difficult. Many sectors are mentioned, and where the government has, given incentives or has incentivized or, has allocated money to be spent on that is renewable energy or, electronics and semiconductors, electric vehicles, textiles, which is emerging as a special opportunity, a special situation, where they have put a very ambitious target of $20 billion, regaining our strength as a largest apparel exporter. Infrastructure, which has been on the forefront for a while. But I think, most investors should not worry about this. Most mutual fund investors should not worry about this, because many a times the government spending does not necessarily translate into results in a defined time frame. More importantly, I would be very, what was the initial reaction to the budget as well. I think more investors, one is that the market will immediately benefit from positive sentiments. Most people who pay taxes will have 50-70 meaningful taxes, will have anywhere between 70,000-80,000 rupees to a few lakh rupees extra. That's one. Second is that the consumer confidence will be will get a boost. All these sectors which will benefit, where there has been a specific provision, they will benefit, but how and when and which companies and how it will translate into investors benefit immediately, I don't know. But consumer sector is going to be a very key beneficiary, and immediately. So I think, but most mutual fund investors should not worry about it. They should think in terms of being diversified and leave it to the fund manager. And but the sentiment turnaround and all the other things, and putting an ambitious target for growth, that I think is a very significant thing, and this can be a turning point for the markets.
All right, with that, it's a wrap. Thank you, Dhirendra, for joining in.
Thank you.
Thank you to our viewers. Keep watching the space for more information. If you like the show, do subscribe to our YouTube channel. Take care. Bye for now.